Hello everybody, welcome to Bitcoin Not Crypto. You can find me on Twitter X at ForestTotal. In today's video, I want to talk about a conclusion that I came up with about my own thinking when I first got into Bitcoin. I got into Bitcoin many years ago. I guess I really took it seriously probably 2016 and started watching videos on it, learning about it, reading articles, buying a little bit, dabbling in other crypto stuff and trying to learn about all of that during what, is now known as the ICO craze. And I think I actually understood a lot of the fundamentals of Bitcoin. I even remember having conversations with people in my family, talking to them about how there's a cost of production, there's nodes that have consensus, and that Bitcoin could be something like digital gold. This still is a narrative, and it still is a way to describe Bitcoin. It's not a very complete way, but it is still functionally a decent way to describe it and a way to analogize it and compare it to something that is a store of value, which is a big part of what Bitcoin currently is. I think I understood the fundamentals of Bitcoin, but I didn't really know what it was worth. And I think that's a very important distinction. And I think that Bitcoin is worth a lot more than 84,000, which is what it's currently trading at. I think you have to understand the problems that Bitcoin solve. I didn't really know that. I wasn't into the market very much. I was, just dabbling in stocks, focusing more on my business, which was filmmaking, and focusing more just on other things in my life. I didn't care that much about money. I knew that money was, I kind of had the belief that money wasn't good. I didn't have the belief and understanding that money was fundamentally broken. I understood that gold backed money and that it doesn't anymore, but I didn't understand how big of a problem that actually is. And I think to really understand Bitcoin, you have to understand money. I think that's why when I got more into Bitcoin in 2020, 2021, and eventually started buying lots of it in 2022, I learned and built conviction on Bitcoin because I started to understand what money was. I literally started listening to the podcast, What is Money? And understanding that this is a question that is fundamentally important to understanding Bitcoin. You have to understand the problems of money. You have to understand that it is backed by nothing and it costs nothing to create it. And that all of the assets around the world, a large majority of them, and a huge part of the value of them is a monetary premium because people are seeking a store of value to be able to transmit the current value that they have through time and be able to extract that value out later on and account for the debasement of money that is happening. So this is a massive problem that all stocks, bonds literally have an interest rate built into them to compensate you for the fact that there is monetary debasement of the currency that bond is printed in. So that is an instrument that is built to be a store of value, but it is built on something that is not a store of value. So how well can it actually work? It's very improperly built because you take a risk when you buy a bond, right? Bonds account for a huge portion. The bond market is bigger than the equity market, the stock market. The stock market is what everybody talks about, but there's more money, there's more value in the bond market. So I think it's really important to understand bonds because bonds are essentially saying you take on risk when you buy a bond and you're taking on inflation risk and possibly default risk, which you're taking on as well with other equities as well. You're maybe taking on a little bit less, default risk, but you're still taking that on and you're supposed to be rewarded for risk, right? In nature, you're rewarded for risk. If you are a prehistoric human, You're rewarded for climbing a tree, getting stung by bees, and your reward is the honey that you've extracted. But you've taken risk. You've taken risk of falling out of the tree, of getting stung so much you have a terrible reaction to it, or just getting stung at all is painful. So you're taking on pain, the risk of pain. Maybe you don't get stung at all, but you still had the risk of getting stung. So this is the same idea in markets. And bonds, when you buy a bond, you're taking on duration risk because you don't know what happens from now until that bond matures, the duration of it, right? If it's a 1-year bond, what will happen within that 1 year to the currency that is underlying the bond? Will it inflate more or will it not inflate? Will it deflate? Like, what will happen? You have to make a prediction. You have to guess at the outcome of what will happen to the base currency that is underlying that bond. So you are taking on risk by buying that asset, and you are hoping that you're making a good choice. And you've been told that you are taking the lowest risk choice by investing in bonds, right? That's why people put bonds in their portfolio, is to lower risk. But the vast majority of risk is perceived as volatility, or vice versa, maybe. Volatility is perceived as risk. And there is something called volatility risk. And it's if you need to extract any sort of value out of your investments, then yes, volatility risk is very important. That's why maybe if you're retired, you should have a portion in Bitcoin, which is a lot more volatile than any of these other assets you might hold. But it maybe shouldn't be your entire savings, depending on how big of an amount that you have. If it's really big, if you have a huge amount of Bitcoin, you could draw on it. And even if it goes down a lot, you'd still be fine, because you maybe have to draw more of it to fund your lifestyle. But ultimately, the volatility is to the upside with Bitcoin. So you're going to end up okay. But if you had something that was a little more cash-like, shorter duration bonds that pay you interest, but the interest is probably a negative real rate of return, with the purchasing power going down over the course of the duration of the bond being mature, and the interest rate paid out being less than the debasement of the currency itself. However, it is very cash-like, and you could sell that without the volatility that is in other assets, and you could use that to fund your lifestyle. So there is a place in a portfolio for bonds, but the bond market is way bigger than it should be, and it's artificially very big because there are a lot of industry, a lot of institutions, a lot of business that is forced to buy bonds because of the volatility risk. And it is part of the rules. And who decides the rules but the government, right? And who issues more debt than anyone but the government, right? So they need buyers, and buyers are often banks and different institutions that need to have some sort of collateral. And they buy different durations of bonds. They might buy corporate bonds as well, but a lot of treasury bonds and bills. And that is because that is what the law has situated them to buy. Now, does it mean that bonds shouldn't be in the portfolio of these institutions? No, of course bonds should be, but it should be a percentage that they deem worthy of having, right? It should be a tool in an arsenal, and just as it is for yourself, right? I'm not talking to the bankers of the bank. I don't have any control over that. I cannot change any of that. The people I'm talking to are people like myself. I didn't understand the problem. I didn't understand how to allocate my portfolio when I first understood what Bitcoin was. I didn't understand the problem that Bitcoin was solving. The problem that Bitcoin is solving is a perfect store of value, right? We go back to bonds trying to be a store of value, real estate, equities, all of this. They all have a monetary premium on them. The apartment that I live in, it costs a lot more to buy it than it's actually cost to build it, or that it's actually worth even in the open market, right? The only reason that the market is valuing it more than what I think its utility is actually worth is because there's a monetary premium on it and a business premium on it, because it can be turned into a business in the form of a rental. And there's a monetary premium on it because it has historically increased in value, basically proportionate to the monetary debasement that's happening. But you can take a loan against it, so you can actually outperform monetary debasement with real estate because you're leveraged with a mortgage. That's a little bit beside the point. Now, when you start to understand Bitcoin, you understand there's no leaks to the store of value. There is no debasement. The debasement is factored into the value. There is currently inflation in Bitcoin. That should be something known. And it is something that's known, and it should be understood. There's currently inflation, 3.125 Bitcoin every 10 minutes that wasn't in existence is unlocked by the miners, and it is put into circulation. Now, a lot of those miners are holding it, so it's not directly put into exchanges. Some of them aren't. They're selling it to fund their electricity costs and whatnot. So we understand that. And the amount of increase is actually now half of the amount of increase of the other historical store of value, which is gold. So gold has an increase, and it is less predictable. With Bitcoin, it's programmed issuance, and every roughly 4 years, that issuance gets cut in half. So originally, when Bitcoin was first launched, it was 50 Bitcoin every 10 minutes. And now it's 3.125 because it's halved every time. So in another few years, that issuance is even going to get less and less. So because we know that, right, how much issuance of gold is there? We're not sure. It's roughly between 2-3%, right, per year. And that's added to a large stockpile, because the gold stockpile is massive, and we actually don't know how much there is. We know how many coins there are. We don't know how many are lost per se, but we know exactly how many coins there are, how many there will be, but we have no idea how much gold there is or how much gold will be produced through extraction. We don't know. We don't have any account of that. We have estimates. So it's a lot more certainty with Bitcoin. Now with dollars, it's even worse than gold. We have no idea how many dollars are getting created, and we have no idea. We can only future project how much more will get created over time. So it is very unpredictable to have something like dollars. Once you start to begin to understand Bitcoin, yes, the price is very volatile because it's a young asset. It's 16 years old, and it is trying to be the base layer of money. However, everything else besides the price is extremely predictable with Bitcoin. We know the max supply. We know the issuance. We can validate all of the Bitcoin in existence. We can hold our own private keys. We don't open ourselves up to the vulnerability of somebody else custodying it or having control over it, like dollars in banks or gold in vaults. We have true ability to own something at almost no cost, a seed plate and a hardware wallet, a fraction of the value that you should have in Bitcoin. So this is an incredible asset when you understand the fundamental problem that we have in the world of not having a store of value. This is something that Saylor talks about a lot. He says, we don't necessarily need a new payment system right now. Visa, MasterCard, Interact, dollars. These things work okay for payment, right? Currency, it's in current, it's in movement. These things work fast enough, they finalize enough, but what the problem is even with the finalization, they're finalizing in something with no value behind it. Dollars are not a store of value. They increasingly go down in value, very much so, and we know that. We can see charts of dollars value going down ever since it got depegged from being backed by gold, by something sound, something with a lot more predictability to it, something that actually had a real cost of production, right? So Bitcoin is solving the problem of the dollar, not as a payment system currently. It can be in the future, but right now, I would say the bigger problem that the world has is the problem of not having a good store of value. We don't We shouldn't have premiums on housing. We shouldn't have premiums on stocks because people are using them as stores of value. We should be able to buy a house to live in for its utility value, for the ability to live in it. That's the use case of a home. We should not be treating it as an investment. It's actually, I would say, very immoral to be doing so. I think that is wrong. It prices out people that deserve to be able to own their own home or to pay rent that doesn't make them sacrifice how they eat or how they live. I think it's morally incorrect to use real estate as a store of value. By using Bitcoin as a store of value, it has no negative effect on anybody else. It just exists. It is not taking from anyone else to continue to be a store of value. So it solves this problem of a store of value. And that is something that I did not understand when I first understood a lot of the fundamentals of Bitcoin. It's something I wish I did, because I would have bought more of it. I would have held more of it, right? I have some horrific transactions on Coinbase that I thought were great at the time. I made $300-$600 on a, relatively small position size and all this. I thought that was amazing. I stepped away from it, focused on other things in my business and in my life. And I wish I just held it. I didn't need that $300, the extra $300 at the time, but now it would be thousands, right? It would be thousands. So this is the same story that I just told you is going to happen over time, because Bitcoin is a perfect store of value and people are waking up to that. So if you want to get yourself some Bitcoin, I use Bitcoin well. And if you use my link, you'll actually get yourself some free Bitcoin on sign up. The reason I use Bitcoin well is they're a non-custodial exchange, which means they send my Bitcoin directly to me when I sell them, give them some fiat. And they have the lowest spreads in Canada and the US and no additional fees. They also have non-KYC options available for Canadians, and all around, it's a great platform. I also use Stampseed as my seed kit, and they have a titanium seed plate and stamping kit, and you can actually use my code BTC not crypto 15 for 15% off of that, and the link in the description as well. Now, if you want some help with some Bitcoin basics, getting your coins off an exchange, security best practices, any questions, anything like that, you can actually book a one-on-one Bitcoin consultant with me, and the link is in the description as well for that. So thanks everybody for watching. This has been an episode of Bitcoin Not Crypto, and we'll see you on the next one.